Good afternoon, everyone. This is Felix Garcia, aka the Finance Pastor. And what an honor and a privilege it is to be welcomed into your home. What a day it has been in the stock market. The stock market is down. Dow Jones is down over 400 points. The S&P has been getting assaulted. So has the Nasdaq. And we are seeing a lot of people taking money off the tables in the last few days. Since last week, the stock market has just been a bloodbath. There have been many people that had just been selling. You have a lot of margin calls. You have a lot of people that will over leverage. When you're buying a lot of stocks on margin and the stocks don't perform, many people are either being called out and they're being forced to sell. We're starting to see that run on gold and silver just really hit like a level where it just stopped just going up, and it just has been downturn. You've seen in the last few days silver down over like 30 to 40 bucks from the high of that 112, 115 ish area. And you're starting to see that a lot of people are really feeling fearful in this stock market. And one of the questions that I pose to people: should you be running in? Should you be buying the dip, as many people say? And that's really for the type, it depends on what type of investor you are. If you're the type of person that you're buying and you're going to think about what the price is going to look like tomorrow, you should not be investing. But if you're the type of investor that is saying to yourself, you know what? I see that the stock is doing this today, but in 3 to 4 years, what do I think the price of this stock is going to be? If that's the type of investor that you are, I'm that type of investor. I am actually buying as the stock market falls. I've been adding to my positions in crypto. I've been adding in my positions in XRP, Ethereum, and also in Bitcoin. I am loving these downturns because to me, I am buying a Louis Vuitton purse, but I am definitely paying a TJ Maxx price for it. And that's what the significance of buying low and selling high. The problem is, what is low and what it's high? We have seen that the stock market has been at all-time highs. So as the stock falls, for many people or the investors that have been waiting on the sidelines and saying to themselves, you know what, I'm gonna wait till the stock goes down to this price, then I'm going to get in. Well, now is the time. If you're that type of person, if you're that type of investor saying to yourself, now is the time for me to start investing, I am all in with you. I'm actually putting my dollars in. There's certain stocks that I've actually gotten out of. I took a small hit on Netflix. Once it went down to the 82.50, actually my stop loss got triggered. So I was out of that trade. And I'm actually glad that it did stop me out, because it went down to that 77. Now it did take a little pop up, but it was a losing trade. And this is the thing is, when you're trading in the stock market, I have a win-loss ratio. And this is the thing is, many people trade and don't have a plan, but I'd rather risk $1 to make three any time of the day. And what I've been taught to as a stock trader is how to lose correctly. It is impossible. It is impossible for you to win every single trade. If you're a swing trader, if you're a position trader, or you're a day trader, it is virtually impossible for you to win every trade. That's why you always need a plan. And knowing what your risk reward ratio is, actually what it does, it mitigates a lot of your losses. Will you take hits? Absolutely. But this is the one thing. If you have a $1 to $3 risk reward ratio, you could be right 4 out of 10 times and you're still profitable. That means that you could lose 6 times and you'll still make a profit. And many people have a little thing is that they don't like losing. Nobody likes losing. But in the stock market, you need to learn how to manage risk. Many people come on my channel and they think that, oh, we want to learn how to trade. I'm not teaching you how to trade. I'm teaching you how to manage risk and understanding that the stock market right now is at a discounted price. Regardless of your political affiliations, what do you think this administration is going to do? Are you bullish? Are you bearish? Do you think that we're going to go up at the end of the year? So you look at last year, same scenario. We took a nosedive around February, March, and April, and you started to see that the stock market rebounded. I'm expecting similar results. Now, a lot of the things that may be holding back the stock market could be a lot of geopolitical news. You start seeing that the Fed chair, Jerome Powell, he's not going to cut rates. So this is, they say this is not a political thing, but when you intentionally screwing the American people because you don't like a president, it is political, even though they're trying to play the political role on the other side. But Jerome Powell, you're a plant. So in actuality, you're hurting the American people all because you don't like a man. So, and that's a prerogative. And there's a lot of people that feel that way. And if that's you, I'm sorry you do, but that's part of the game. So we're starting to see that if you're waiting for an interest rate cut, it's not going to happen till Jerome Powell leaves his position. And now we're going to see that and coupled with a lot of geopolitical unrest is going to create a lot of different imbalance in the stock market. We are going to have some choppy waters to navigate, but as a long-term investor, it is your prerogative to at least be in a place where, hey, I'm setting myself up for the future. If you're looking at what a stock price is going to be today or tomorrow, you're going to be very scared to invest in the market. But if you say to yourself, you know what, I'm taking my hard-earned dollars, and you know what, I'm looking more for the future, whether it's 4 or 5 years, 10 years, or 20 years down the road, are you going to be happy with those investments? And I would ask the people that are in today's society, 20 years ago, if you would have invested $5,000 or $10,000 and not worried about the news in the stock market, whether you did the S&P or you did the NASDAQ or you did an Apple stock or you did a Tesla, Nvidia, or Coca-Cola, would you be okay today? And the answer is going to be yes, because what we have seen is what you're doing with your dollar is you're buying companies that are good assets, and you're buying it with dollars that are worth less. And as the Federal Reserve keeps printing out that printing press and prints out money, your money's going to devalue every single year. So how do you mitigate inflation? Well, you take that dollar and you buy good assets, whether it's real estate, whether it's good stock, whether it's a business. That's the thing that you start investing your dollars into, something that's going to appreciate. Many people don't have a problem investing their money in depreciating assets, a new car, clothes, all these things, the latest and greatest gadgets, those are all depreciating assets. You're paying the company to make money. Why not invest in the company that makes the product? You would do so much better. Imagine if you take the car, the 70,000 that you would pay to buy a Tesla. Well, instead of taking $70,000 and buy Tesla, why don't you take that 70,000 and buy the stock? With covered calls, you could probably cover the monthly payment of that car payment. And if you did that, you would still have the car and you still have an asset. It's just the way you're buying it. And we're seeing that many moves in the stock market. Now, we're starting to see that many of the AI companies are really into making commitments with a lot of energy companies. And I've been doing some research I've been doing some research on certain energy companies, and I've come up with four that I'm pretty much bullish on. I know there are other companies that are really good, but I wanted to point out like four of the main companies that I'm looking for nuclear power. I think that's the next big thing. We need nuclear power in order to power up AI, the data centers. So my first one is Nextera. It's NEE. I love that because of what they're doing, their partnership with Google. My next one is UUUU Energy, which is focusing on, it used to be mostly focused on uranium, but now they're looking more on the rare earths. My third one is CEG Constellation. We see that they built a nice little agreement with Meta and Microsoft. So those are things that they have commitments of actually money that's going to come into the future. And my fourth one is going to be Oklo. And that's something that Sam Altman has already been a part of that company. He's an investor. So I see them as using that as a way to power up the energy sector. And there are many other great energy companies, but these are the top four that I'm looking at that really going to make a difference. I want to look at and also take a little bit of time to look at some charts here. So I want to share my screen. Right. So I want to look here. We're looking at the stock chart of Tesla right now. We have seen Tesla just been on a tear on the downside. But it also these lines here, I've had these lines for months. So this is not something that's new, but right now it's crossed this line here. But also there was a gap earlier here in the year around October, September. You can see that it's filling this gap right now. So Tesla is down to 393. This is also in my portfolio. My buy-in on this one is actually at the $162 range. So I'm okay, but seeing the stock just go down is kind of not my favorite thing. You kind of seeing, if you see the side right here, silver down to $73, down 14 bucks today. Gold down $154, trending in that $4,800 range. There's a lot of companies here that are really just getting beat up. And as an investor, you have to look at, okay, is it a time to buy? Is it a time to sell? And that's where the famous philosopher Kenny Rogers said, you need to know when to hold them and know when to fold them. So these are stocks that I'm looking at that will it be a play for today, or is it something that, hey, let's wait up to see what the market is going to do? But I will tell you this, sometimes for investing in a stock where it's part of like a falling knife is not always the most probable thing you should do right now, but you should start seeing that this could be something that you can put on your watch list. I would not be shocked if the Tesla went down to 340. That's something that I'm really looking at. Tesla, and you have to understand this, Tesla is going to stop being a car company. This is going to be a robotic company now. And I really do think that that is the future. But just like any good company that learns, okay, what's the next thing? You have to transition. One of the best examples that I've seen of this in the last maybe 30, 40 years, there's others and there are many good companies, but look at, many of you remember Corning. Corning is now is known as a fiber optics type of company, but Corning really got their name made on making ceramics for the microwave. So many of you who remember in the 80s, all the microwave dishes and all that, well, a lot of it was Corning. But Corning understood that their competition in the microwave or in that industry was being saturated. They had the wherewithal to transition into what is the next thing. And they actually were the early adopters of fiber optic cable. And to the credit of their CEO, this is actually something that I'm seeing Tesla kind of mimic, as far as, okay, electric cars are getting saturated with BYD, Rivian, Lucid, and many other companies that are getting into that space. But you also see that there's a lot of companies that are saying, okay, we're going to keep our gas guzzlers. We're not going to be investing any more money. And if you live in the South, you have gone through these snowstorms or ice storms. Electric cars are not the best vehicles for that. And I still believe that they're like 20 to 40 years away from really being effective, because a battery charge in the winter is not the same. But you put that with a gas, you can always count on a gas car running, or your diesel. So that's the one of the things you're seeing with Tesla. It's kind of transitioning into a different uh, uh, sphere of influence and also productivity. Again, this is Netflix. Many of you heard me talking about this. So I got in around the $83 $15 range, and I had a stop loss at 82.50. This hit my stop loss, so I was already out of this play. It's bounced back, but it's gone down lower. But this is one that I am still watching, but I'm also want to buy a Louis Vuitton purse, but I want to pay a TJ Maxx price for it. So this is still on my watch list. I'm bullish on Netflix, but there's a lot of headwinds with Netflix and a lot of the Warner Brothers merger or acquisition, I should probably say. And you're seeing Congress really inspecting this. Now, one of the big players in this is Larry Ellison. His son is involved with Paramount, and this is the thing that you got a lot of money, and you also have Larry Ellison that has something that many of us wish we had, with other than money, it's proximity. Proximity to the current administration is very key. That's the one thing that many people have to understand. Your network is your net worth. And you're starting to see that how this could affect this Netflix stock. I could see Netflix either faltering down into the $73 range, $70 range if this is not approved. You have to see the what Larry Ellison is doing, and you have to respect what he's doing. So I'm actually looking very closely to this, but that's something that I'm paying attention. Let's look at the S&P. S&P bloodbath down 88 points as we speak right now, hovering that 89. Nasdaq down 370 points. Again, it almost looked like similar stocks. We look at the Dow Jones. This is a big down day, 600 points right now. So this stock is seeing a lot of pressure. You're seeing many people who have to sell a lot of their stocks because of margin call. And margin, if you don't know what that is, if you have a portfolio, you can borrow money to actually buy more stock. But the problem is if you're over leveraged, like severely over leveraged, they do what's called a margin call on you. And you either have to sell your stocks to cover the losses, and you're starting to see people that have to sell at a huge loss. So you're seeing a lot of that being displayed on today. Gold, let's look at gold. I mean, this stock right here, look at this volume. Look at this volume shove. It looked like it tried to go up the last 3 days, but it's just getting beat up. And as Bitcoin, Ethereum, crypto, everything is getting beat up today, you're seeing a huge sell-off on gold and silver. In addition to that, again, I'm glad that silver is coming down now. I own silver, physical silver, but I've always wanted to buy more, but I was not going to buy in the $80 to $90 range, even at the $100 range. I really felt like we were oversold. And I'm actually glad that this pullback is happening right now in silver. So I'm bullish on silver, but long term, but not today. Not today. Let's look at Ethereum. Let's go like Ethereum. Woo! It is coming down. Let me look at. There we go. There we go. Oh, down another 100 points. So Ethereum really, I've been adding to my position, but it's only so much I'm going to add on a falling knife. I'm still bullish on Ethereum. I'm bullish on Tom Lee, and I'm still in BMNR, and that one has gotten hit. I'm taking a little pain on that one, but I am buying for the long term. So I don't have to sell right now. I'm actually doing all right. I'm actually adding more. To me is I'm bullish on this company, but I'm also looking at what the president is doing, what the administration, the Genius Act has passed. The only thing that I'm looking at, when is this Clarity Act gonna take some wave and pass? But right now it hasn't. So we're kind of seeing some movements in that. Or what you're seeing is a devaluation by big institutions only that they can buy more. You see people like Jamie Dimon, they talk bad about all this stuff, and maybe that's maybe intentional, so they can actually end up scooping up more of these precious commodities. And I'm looking at that also. Let's see what else. Let's look at Coinbase. Coinbase has gotten hit up. This is one of those companies that's just had a precipitous fall from the highs, even from October. From the 401, it's down to 150. Imagine if you were a trader who bought up here. You are suffering. You are suffering right now. If you like Coinbase, and this is, I'm gonna say this: if you like Coinbase, you're gonna love this at this price. I think this is a super discounted price, and I think you have to look at it with respect. But also, Coinbase could go down lower. They have earnings. When is earnings? Let's see. Actually, on next Thursday actually is earnings. So I want to see what's the reaction to this. Now also the slide that in crypto, you're gonna have a lot of panic selling right now, or you're gonna have people that are just, hey, they have good emotional intelligence and they're just holding right now. If you're holding, I think that's the to me, I would hold, because right now is when I've looked at stocks that have done this in the past. AMD did this to me several years of last the 23, where it went down to that $78 range, and then it just took off right away. And I bought in at the $140 range. So this is something that, depending on what type of investor, what type of cash you're using, really would determine how you would approach this. Let's look at Robinhood, another one that has gotten hit up also. From the highs of 150 is basically half of what it was. So think of it: if you were bullish on these stocks several months ago and you're saying it's too expensive, it's too expensive. Well, now you're getting it for 50% off. That's like shopping right now. That's like almost a Black Friday special. This type of stock, Hood is on a Black Friday special right now. If you're a long-term investor, if you're saying, hey, this right here is where it's at, you're gonna be purchasing this. This is a pretty good eventually investments, because this is geared towards a lot of the newbie investors. Now, I'm questioning whether they trying to get into a lot of betting on just sports and all this stuff. I'm not a fan of that, because what you're gonna be creating is a generation of gamblers. You really are, especially with all these new gambling platforms that are found right now, is really creating that type of space. Let's look at some other ones. I want to look at Nexera. Again, Nextera, if you're bullish on AI, if you're bullish on energy, I would say consider this stock. I'm not saying buy. I'm not a financial analyst or a licensed professional. I'm just an enthusiast. I'm actually an opinionator. But this stock right here is something that I would consider to be maybe in your portfolio. This one, if you look at a PE ratio, with a PE ratio is price per earnings, in Nexera is actually, you're still buying at a decent price. You're buying at a price where, hey, you're not paying too much for it, but you're not at the very bottom. So think of it as a neutral, that it's a fairly valued stock. Another one that falls in the fairly valued is going to be Constellation, CEG. Constellation, even at the price of $246, this is still with their earnings and the price, the PE ratio, which is what's the price versus the earnings. This is still a profitable company. And that's what you're looking at. It's their PE ratios are around the 28, which you're still buying a fairly valued company. Now, the next two are little, still losing money, but that does not mean you should not invest in it. A lot of the money that they receive is going right back into research and development. So energy fuels, they were mostly primarily focused on uranium, but now they're seeing many of the opportunities in rare earths. So we kind of seen that this one is one that a lot of investors are bullish on, but it's also from the lower price range. This is something that maybe you could start adding little by little and playing the long game on that one. Another one that I'm looking at is Oklo, which is one that's sponsored or really heavily backed by Sam Altman. But again, if you thought at 150, 160 that this was still a good stock, man, you're gonna love this price right here at the $61 range. I've been talking about Oklo for months. If you've been waiting for when this stock is going to be at a right price to buy, I think you should look at it. It's at a place where many people may say, hey, this is a discounted price. So let's look let's draw a chart line here. This right here, it's in this balance, but I'm also, if this comes down, this $20 range could be something that you need to look at. If it goes another leg down, you could look at the $45 range, that 44 section right there, if it continues to go down. If there's a slight bounce, I would consider this one, Oklo, right here, in a buy zone if it bounces right here. But that's something you have to make the decision. You have to understand that investing um, does have risk to it, and you have to manage those risks. If you can't manage risk, or if you have no emotional intelligence, this is something that you shouldn't be doing. A lot of people who have never invested before, uh, you should really consider, like, hey, the what is my risk tolerance? Investing is actually an emotional game. For those of you who've invested, who've traded options, futures, you understand you're playing you versus you, and it's the emotional game. That's why Warren Buffett says, when people are greedy, be fearful. And when people are fearful, be greedy. You have to understand that you need emotional intelligence to invest in the stock market. Right now, many people running, selling at the lowest prices. And I'm telling you this, as someone who's invested for 18 years, sometimes the long game is where it's at. Being patient, knowing that, hey, I invest in this dollar right here, but it's going to grow to 20, 30, 40, 50x if I stay the course for 10, 15, 20 years. I'm not about making a quick buck. There's no such thing as that. And many people who try to make quick bucks usually lose all their bucks. So what I'm advocating here is for prudent investing. That's why I say is you should invest in something that you understand or that you love. Some of you have gifts that I'm gonna be unaware of, where God has blessed you, where a knowledge in maybe nuclear, knowledge in the AI space, knowledge in technology, a knowledge in the food industry, and the futures, so on and so forth. I would say is wherever you work. I always say bloom where you're planted. So you have to look at, okay, where has God placed me? What jobs have I done in the past that I can actually go and use for the future? And I would say consider those things and maybe invest in those type of companies. I'm looking forward to what the stock market is going to do in the next few days. It's Thursday, it's Friday, Friday's coming tomorrow. There's going to be a lot of headline risk, news, articles. If we attack and go to war or attack Iran, attack their nuclear power, you're going to see a lot of heavy selling because of the uncertainty in the stock market. With the higher interest rates, many people are still unsettled. You have a lot of people within the ranks of the government that are just against each other. And what we as investors is we have to navigate those waters. It's going to be choppy. The next I would say until the next 2 months, we're going to be on some choppy waters. But once we find the bottom, Once we find clarity, I'm telling you, this is going to take off this year. I am bullish on this government. I am bullish on what they're doing as far as for the American people. I'm not an apologist for Trump. I've made money with President Obama. I made money with President Bush. I made money with President Trump. I made money with President Biden, and I'm going to make money with President Trump again. So you start seeing that it's not about a political affiliation. There's always people that want to pigeonhole you. They want to make you to be this or that. And I tell you this, I don't lean left and I don't lean right. And I don't serve an elephant and I don't serve a donkey. I serve the lamb of God that was slain for our iniquities. And that's what I tell people is you have to look at biblical investing. And we serve a God that you read the Bible, there's a lot of dissonance in the Bible, but some of that dissonance is cohesive dissonance. So you start seeing that not everything is black and white. Not everything is this or that. There's a lot of things in the middle that you're like, and I tell this to people, God cares more about how you treat your neighbor than your ministry. We're in a season where many people are fighting with their neighbor. Why? Because you're with this party, you're with that party. I'm telling you this, no politician has died on the cross for you and I. But you know who did? Jesus. Jesus died for our sins. Don't be upset at your brother or your sister because of a political party. You know that we've become so, social media has made us really against each other. Was something that was supposed to bring us together, to connect, has drawn us many apart. And now we all creating these bubbles like, oh, if you don't think like I think, I don't want to hear you. Or if you don't do what I say, or you're not really my friend. What happened to, hey, I might not agree with you, but hey, there's common ground here. I might not like this, but hey, you're a good man. I love the way you treat your kids. Can we be friends? So we're starting to see is that don't let the enemy or what's happening around you be cruel to your fellow brothers and sisters. God cares more about how you treat your neighbor. And I'm all about missions. I'm all about people loving on God's people. But don't step over broken and hurting people to go help broken and hurting people. Many of you have some gifts to go across the pond, and I'm all for that. But don't step over broken and hurting people to go help broken and hurting people. You know who needs help? Your brother that lives across the street, your sister that lives across the street. They need Jesus too. We all need Jesus, even me. Daily, I got to die to my flesh. Every single day, I got to die to my flesh. And the stock market just closed, and let's start seeing what some of the end results of it. S&P finished down 84 points. NASDAQ finished down 342 points. Dow Jones down 593 points. What a big move down. But many of the investors are either weary or they're just really taking a lot of Pepto-Bismol right now. So I'm going to look at what has happened over the day. I've covered several positions, but I look forward to just speaking with each and every single one of you. Until next time.